Good day. I hope you all good. I hope you all good. Today we're gonna be doing a grade 11 accounting paper, income statement. So we're just gonna cover that one quickly. So we're gonna have a part one. This is the part one and then the part two. So let's get to it. So we've been given an income statement, but firstly, I think I wanted to address the first part of the concepts. I think with the grade 10s as well, I've covered the concepts, meaning that you, when answering questions, don't leave this part of concepts. Don't leave this part of concepts. It's only 4 marks. It won't take you that much time. So it's just you matching column A against column B, so it can boost your marks. So please start with this one, and then go to the main question. So I won't go through it. I won't go through it. The name of the business that we, or of the partnership that we're dealing with, is Best Buy Shoes. They said we are provided with a pre-adjustment trial balance, on 28, or of Best Buy Shoes on 28 February 2022. And then they said Best Buy Shoes is in partnership, is a partnership with partners A, Boots, and T Techies. The business sells shoes and also repairs shoes for which a fee is charged. So that's what they do. And then the required says, prepare the income statement. Prepare the income statement for the year ended 28 February 2022 for 36 marks. Prepare income statement for 36 marks. So we've been given, so our year started on the 1st of March 2021, and then it ended on the 28th of February 2022. So that's what we're dealing with. So this is the trial balance that we'll be using, the trial balance. So if you just go through the trial balance, you get to understand that there are items here that we won't even charge. So, and then another thing, because we know now what to do, you need to go to your answer book, or before going to your answer book, there are things that I want you to know that are key when preparing an income statement. Your accounting period, your information, your given information, how to interpret it. So here we're going to be interpreting the given information, the additional information, and then how to treat those adjustments. But the best way is to also know the structure of an income statement, so that you can quickly go to your answer book, go straight to your answer book, start inserting amounts. You know that sales is the first amount that must go in, less cost of sales, you get your gross profit and the rest. So with the expenses, like start populating, go to the expenses side, sales in which is open brackets, add the 175 pension contribution. You do everything that needs to be done. You do everything that needs to be done, like just before going through the adjustments. Another thing that you need to do is going through the additional information and then try to link it to the given tab balance. Where will this thing fit? Where will this thing be covered? So let's quickly go to the additional information. So additional information, we said adjustments and additional information. They say dismissed, a data dismissed is to be charged 40 rand interest on his overdue account. So I would just go straight to the point. A debtor is someone who owes us money, who bought on credit, and then we've charged him interest. So that interest that we're charging him is going to be interest income. So this thing is going to affect your interest income. Do we have interest income here on our? Seems like I can't go back to the previous thing, but it's fine. So you just have to take it to interest income. This will be interest income. The next one, an amount of 109 has been received. 190 has been received from a debtor. Debtors are doing a lot. From a debtor behavior whose account had been previously written off as irrecoverable during January 2022. This transaction has not been recorded. So they're saying that we've received 190 from a debtor that was previously written off. Simple. Just take it to what do you call this one? This is income, but it will be under other income in your income statement. So you just have to take it there, other income in your income statement. So it's called bad debts previously written off. So it's income. Then moving on, another debtor. G. Smith is a debtor who owes 300 rands. This must be written off as bad debt as he has left the country, meaning that we need to take it to bad debt written off. We just have to add it to bad debts. So we've dealt with debtors 3 times. The first one was charge interest. We added the interest as our income. The second one, this one was previously written off, and then now they are paying. So we took that one. That's our other income, and then this one must be written off as an expense. Go take it to bad debts written off for the year. And then moving on to the next one, the loan statement received from ABSA and had the following information: balance at the beginning of the year, repayments, and balance at the end of the year. So if they give you this information, they want you to calculate interest expense. How do you calculate interest expense? You just have to say opening with 145, opening which is 145. So that's the best way I want us to do it. Opening which is 145. You need to add the repayments of 40, or rather subtract them, and then after subtracting them, you get 105. So we compare 105 and 125. 105 and 125, you get 20,000. That will be your interest expense. So, or else open a T account. When you open a T account, you're gonna put the opening balance on your credit side, gonna put repayments on your debit side, and you're gonna put this balance on your is it on your I think on your debit side, sorry, on your credit side down there, and then it will be a balance carried down on your debit side. Yeah, so if you add you get a difference on the side, yeah, debit, because I think we it's gonna be less than the 1 year credit. So if I'm not mistaken, but if you use a T account, that's how it needs to be done. And then fee income, this is income, which means it goes under other income, includes an amount of 250 that has been received in advance. Something that has been received in advance, you have to subtract it, go there and subtract it. A debtor returned goods with a cost price of 450 a debtor. Again, the business uses a markup of 20% on the cost price of all goods. So here, with someone has returned goods, the goods were costing 450. The business uses a markup on the cost price of all goods, meaning that there are 4 things that we need to know here, 4 legs to this transaction. You have your debtors control. You have your debtors control, you have your sales, you have your cost price, and your trading stock. So the 450 will affect what? The 450 will affect the cost of sales. And then you need to calculate the one that will affect your sales. How do you calculate it? You just have to say 450 multiplied by what? 120 divided by 100, and then that will be 540. 540 will affect your sales. The rent for January and February 2022 has not yet been received from the tenant. Note that the rent was increased by 10% per month as from 30 September 2021. So meaning that, first of all, the rent for Jan and Feb has not yet been received, meaning that this person owes us rent for 2 months. So only the rent for 10 months has been received. So number 2, on top of that, the rent increased by 10% per month as from 30 September 2021. So there's a method that you need to use in calculating or in determining this rent. There's a method that you need to use in determining or in calculating this rent. There's a method that you need to use in determining this method. So I think we'll continue in part 2